This is a BTC USD Bitcoin. Today is Saturday 13th of September. So I'm just trying to backtest here, and I can see something present itself here. So I have this inverted fair value gap, and then this is Wednesday candle, Thursday candle. This is the daily time frame. So Wednesday, Thursday, you can see Thursday's candle swept the low of Wednesday and closed above it, and then now this gives us a dealing range that should tell us that price is most likely to go higher. So that is Thursday, and then now with this dealing range, we are expecting price to trade into the discount side of this dealing range before shooting up, and you can see that is what happened. So Friday candle, we mark where it opens, go to the 1 hour time frame, and then we just observe what happens. So the Friday candle opens at this point right here. You can see it is on the premium side, price is on the premium side of this dealing range, and with that, now you want to have an area of value where price is likely to react off, but it has to be inside the discount zone of this dealing range. And as we can see, we have an inverted fair value gap right here, and also another tiny fair value gap right there. So we're going to use those two, this inverted fair value gap in the 1 hour time frame, and I can see this is Friday, and then on Saturday is when our price comes back to this 1 hour fair value gap, right? You can see this. So 1 hour fair value gap, we go to the 15-minute time frame, we see how price reacted of this fair value gap. So price comes into the fair value gap, wicks, I can see a wick there, then we have now an engulfing candle out of this 1 hour fair value gap, but this time it is in the 15-minute time frame. So 2 candles, this one closes outside of this inverted fair value gap, and now these 2 candles will give us a range, a dealing range like that. Now you can get rid of the larger dealing range. It has just finished its purpose like that. Now once you have this dealing range of engulfing candle out of a fair value gap, what you want to do is now you want to place your buys at the midpoint of this dealing range, at the 50% of this dealing range. And now that is what you do, place your buys at this point. The stop loss can be below this wick, or you can have we can come to the lower time frame to refine the stop losses. Can also put it there, because now we have a fair value gap that this price has just reacted off. And if you look at it, this is refining it further, you have this fair value gap right here. So this is now a much finer model to take an entry in. So with that, stop loss just below this fair value gap, and now you want to take your take profits. So take profits, setting them, you can start off with, you can even start off from this point. This is 2.95, and then we have 3.9. This relative equal high is at 5.2, and then this significant swing high, which will give a 10 point something, around 10.14, almost 11. This is actually 11. So we want to see how long price took to get to this take profit. and you can see finally it hits that take profit. This is so taking this buy on Saturday at 1400 hours, and on Wednesday at around 8:30 a.m. you had price hitting your take profit, and that is how now you can utilize this model to trade Bitcoin. So I didn't know actually you can trade Bitcoin, but you can see it does. So what we are doing here is we are looking for 1 hour, not 1 hour, the daily time frame CRT model. And as I said in my previous videos, CRT and AMD and PO3, they all look the same to me, so whichever way you choose to see it, to understand it, as long as it works for you. So in this case, the second candle gives us a dealing range. First of all, let me refine this condition. The second candle sweeps in this case for the Bitcoin, we have the CRL or CR low of that range of the previous candle, and then it taps, and then it taps, or it is inside an area of value. In this case, we had an inverted fair value gap, daily inverted fair value gap. And then where we have now the second candle giving us a dealing range. In our case, it was a dealing range where we were looking for buys in the discount zone, where we look for an area of value in the discount zone, and then this area of value is either an IFVG or FVG. In our case, it was an IFVG, inverted fair value gap, and it happened in the 1 hour time frame. So the next thing you want to look at is how price behaves around this 1 hour IFVG. In our case, we had the 1 hour IFVG, and then if it gives a dealing range if it gives an engulfing candle, and then this candle gives us a dealing range, and we place buys at the 50% of that lower time frame dealing range. So that is what happened with Bitcoin, and this was a swing trade, holding it for 3 days until when you now take your profits. Actually, it was 4 days: Saturday, Sunday, Monday, and Tuesday and Wednesday. So Saturday, Sunday, Monday, Tuesday, Wednesday. So those are actually 5 days of holding a trade, and you can see it gave a very good return of 11.14 risk to reward ratio. So that is it. That is a model presented itself in Bitcoin. Until next time, bye bye.